morning at 8:50. We are 20 minutes after a very important non-farm payroll number in the States, which players around the world have been watching for any indication that the U.S. economy is stronger. Therefore, the Fed would be more in play in terms of changing their approach to interest rate policy. Do not believe they were going to be raising rates anytime soon. This number, however, was a disappointment for those people that were looking for better job numbers. A loss of 85,000 is something that was at the bottom end of the range, something that will keep people at bay on the change. In other words, dollar should be weakening up here. We should see some continuation of this view that the worst is over, that the U.S. has absolutely recovered, but that longer-term trend growth is still in question. And as long as the labor market's weak, people will feel that the U.S. market is weak. But the markets right now, after gapping down for the first 5 points after the numbers, the S&P doing probably the first of a few cha-cha-chas, moving back up here. In fact, down 3 points has taken half that loss back. Looking into the markets overnight, China was up 10 basis points, India down 43, Malaysia up 12, South Korea up 70, and Taiwan up 53 basis points. Into Central Europe, Czech Republic up 56, Hungary up 92, Poland up 37 bips. Russia, again, closed. Local markets will open on Monday. Russian GDRs and ADRs trading in London down about 75 basis points this morning on weaker oil. Looking into Latin America, Brazil's open down 16 basis points. Chile's open up 33. And in South Africa, the markets are up 72 basis points there with a currency that is significantly stronger. In fact, you're seeing emerging market currencies rally dramatically against the dollar, again, on the weaker numbers out of the States. On the headline, more follow-through on the China fears, which last night dealt with the reality that they had issued debt at 5 to 6 basis points higher, excuse me, than they had guided. Rising rates in China are certainly going to be what people are watching, but the market was talking about, are they taking the stimulus out in China? Last night, the bank regulator denied press speculation. It had raised the required down payments for a second home, so another tool that they may apply to take some air out of the property market. Moody's raised Turkey's sovereign rating one notch. In the Eurozone, November unemployment rate, also they had big employment numbers, came in at 10% versus 9.9 expected. And this is moving in the wrong direction. In fact, this is the highest print since 1998. And the German November industrial production month over month was up 0.7 versus 1.0 expected. So again, weaker data across Europe, weaker data in the States, and headlines that China is not changing the approach. So it kind of feels like Groundhog Day. In other words, we're where we were a month ago. That's it.